Hello, everybody. Steve Griffiths here, developer of the MT Predictor software program. Welcome to today's webinar. A few of you have reported that, excuse me, that the webinar email invite looked like it was an hour off, so I'm not quite sure what, excuse me, what was happening with that. So I'll have to look into that. But anyway, I can see a lot of you guys are in here at our normal time, so we might be a little bit light on numbers today. Which is a pity because hopefully it's going to be a good webinar. But let's start with our normal risk disclaimer and just remind you that all examples in this training room should be considered hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. It doesn't matter what approach we take, there always will be losing trades. Right. I don't normally look at Bitcoin because it's not actually cryptocurrencies are not a market that I tend to follow myself, but we have had a number of new subscribers come on who have been who are looking at cryptocurrencies and Bitcoin in particular. So I thought I'd spend the first part of today's webinar working in TradingView and looking at Bitcoin over the last few days as well. The approach we use, it doesn't matter whether you're using TradingView, whether you're using our standalone version, whether you're using our NinjaTrader add-ons, whether you're trading Bitcoin, whether you are looking at the USE minis, stocks, Forex, we take the same approach. And for you, those of you who've been with us for a while, you should be very familiar with this, but I'll just repeat it. MT Predictor is not a black box system. I've been in the markets for 34 years now, and actually we've just had our 20-year anniversary for MT Predictor. I've said it before, but for you guys who are new, believe it or not, Saturday was the 20-year anniversary of MT Predictor. Believe it or not, yes, I launched MT Predictor about 4 or 5 hours before the Twin Towers happened. So that wasn't very good timing, was it? So little did I know that, you know, launching at 9 o'clock in the morning or UK time, that how many hours later, 4 or 5 hours later, the first plane would hit in New York. And obviously that was a tragic day. So obviously still feel very, very hard to talk about it, and actually to, you know, even to be able to celebrate MT Predictor's birthday when it coincides with such a tragic day over there in the US. And obviously our hearts and thoughts go out to the people 20 years on who have still coming to terms with what happened all those years ago. But anyway, so here we are in the 21st year of MT Predictor. So what we've learned over those years is MT Predictor, or the markets, are not we can't use 100% black box system. In other words, we can't just take all our setups blindly. The reason for that is basically markets are random half the time. I don't know if any of you guys have been following the markets for any length of time, but you'll see periods when, you know, the market is just making chops and it's not really going anywhere, and it's really difficult to know what on earth's going on. And a lot of people struggle with that. But what I did is said, right, okay, when the market is not doing what we anticipate, let's just deem it as being random. Let's just deem it as being, you know, in a time when we can't actually analyze the markets. Yes, thanks. Thanks, PH. PH is one of our long-term customers, and he was actually following me with the programs I was doing stuff with before MT Predictor. So, you know, he was actually with me, well, over 20 years now. So yes, PH, it's been quite a ride over the last 2 decades and a little bit more. So yeah, thanks for just mentioning that. So anyway, what do we do with trying to find when the markets are in a clear pattern? What we do is we take a multi-time frame approach. So what we do is we look at a time frame higher than, oh, PH said he's been following me for 30 years. Wow. Could be that long, PH. Yeah, so I started in 1987. So yeah, I've been going 34 years. So It could be 30 years. So it's amazing where the time's gone, isn't it? Anyway, we digress there. So anyway, what we do is we look at a multi-time frame approach. So we look to a time frame higher than we're looking to trade on. So we quite often follow the E-minis on 3-minute charts, and for the higher time frame, we go out to the 15 minutes. If you're say trading daily stocks, the higher time frame will be the weekly. Whereas I'm looking at Bitcoin here in TradingView and looking for setups on a 15-minute chart. So the next logical time frame up would be the hourly. So we look for time frames between 3 and 5 time frames higher. So how do we do this? Well, what we do is, I'm just going to go back in time just a little bit, go back in time to here using their bar replay and just show you what we do. What we do is we basically place our decision point levels on the chart. In other words, these are levels where we are anticipating, not projecting, where market reversals will occur, or may occur, I should say. Remember, nothing's set in stone. So in TradingView, we just pull up the script because we can't click on the chart and do a right mouse click. It'd be lovely if TradingView eventually put that into PineScript language. That would be really great, but we have to do everything by our refreshing the parameters in our scripts. So I'm just going to go back to this pivot high here. So that's 1, 2 pivots back. So I'm going to select the pivots back. I'm going to take that to 2. Then I'm going to click the enable, and as you can see, it placed the DP on the chart for you. Now, what I do to keep it on the chart is I'll just do a little rectangle around it. So I'm just going to grab a rectangle. Just going to put a rectangle around it. Perhaps I can put in here. Title. Then I'm just going to lock it. Now I lock it so it doesn't move by hitting it with the mouse by accident. Now, the reason we do this is because when we change timeframes, we don't want the script to recalculate. So can you see what we're doing? We're working in advance of the market. We're asking the question. We're saying, right, there's an area of resistance. What are you going to do, Mr. Market, if you get to that level? Not when, but if. Let's turn training mode off or bar replay off. And as you see, the DP recalculated there. So that's not what I wanted. So I'll just disable the DP and leave it like that. So can you see what happened? Here we basically got the market coming out to that level and started to go off. So if I come back to the 15-minute chart and again use our bar replay and come back to say here somewhere. In the bar replay in TradingView, you have to go for the next completed bar after the bar you want to look at. So it's not that the setups come in late. It's that, what did I do there? Did I just turn that off? What happened there? It's changed to the ES. I didn't really want to do that. Bar replay, I know, isn't available for that. That's very frustrating. Why has it changed to that? Oh, perhaps it doesn't like the bar replay and the Bitcoin. That's very frustrating. Let's get Bitcoin back up again. Looking at it in there. Right, that's what I was looking at. So this was I'll just try and do it without bar replay then. It is quite frustrating sometimes in TradingView when, like here, the Bitcoin is using data from TradingView, and on my other workspace I have open here, the USD Minis is actually connected into my TradeStation account there. So it's actually using data from TradeStation in a live real-time mode. So I think that's what confuses TradingView sometimes when you've got a broker connected for one market, and then you're trying to follow another market with the data from TradingView itself. So gets a little bit confused. But anyway, can you see what's happening here? Basically, the market came into our higher time frame resistance. It then started to back off a bit and then made a correction up into where a sell was here. I'll just try the training mode again and see whether that does actually like it. So just try it again. Sort of worked, didn't it? So this is what we're looking for. We're looking for the market to make a reversal at a higher time frame DP resistance. You see here the market went to this level, it started to back off. Our MTP trend turned red to show that it was actually in the process of making a reversal as well. And that confirmed that that market trend was now down. So therefore, we should be looking for sell setups. And as you can see, we had a TS3 sell setup here. I'll just try and place the analysis on this and see whether it doesn't throw us out again. So that's an advanced setup. So I'm going to do pivots back just because I don't want to use the training mode again, or will it? Let's just try it. Let's just try and see whether I can use the training mode to that bar there. Let's just try, fingers crossed, because it's a lot easier for you guys if I can. Is it not going to do it? It's going to throw me out. No, we're there at the moment. So this is what we had, is that we had a sell setup coming there. Our MTP trend was red. In other words, it was telling us that, that the market trend was down. So notice how I don't use the MTP trend color first. I use it second. I look for the higher time frame resistance first, then confirm it with the MTP trend, look to take signals in that new trend direction. So can you see how this TS3 wave 3 trade setup was a good one to take? Let's place the analysis on. So this was on the last pivot here, and we use a bar offset here of 1 because the red sell bar was 1 bar after the pivot high. Can you see that? There's the pivot high. The red sell bar was 1 bar after it, therefore we do a bar offset of 1. Let's try and place the analysis on. And that was the trade setup that came in there. So going short at that level, and that was our target. And as you can see, it basically hit it on the next 15-minute bar. So that turned out to be a nice trade indeed. But can you see how we're looking to first look to see if the market is making a reversal off a higher time frame resistance area? Second, we come down to the shorter time frame to look for the trade setups. Let's see if we can go forward a bit, because the market came down. It then went back up again. And if I go forward again, we should have a VS sell there as well. So this was also at that same resistance area there. Can you see that? Was also at the same resistance area. So this was also a good trade setup to take. There's also an advanced trade setup, again, on the last pivot, and 1 bar offset because it's 1 bar after the high. This is also a trade setup to take. This time, the potential profit was 6 times the initial risk. If I turn the bar replay off, and obviously it won't place the analysis back on because it's placing it on the last pivot. But you can see that the VS trade setup worked very nicely down there indeed. Came in very nicely. So even though we're looking at Bitcoin, we're doing exactly the same kind of approach as we do for our normally minis. So let's go back to the hourly chart and just see about where DPs were coming in on other pivots. So I'll just come back to the decision point level. I'll just go back to that pivot, which was now 1, 2, 3, 4, 5, 6 pivots back. See, there's the DP in the high there. If we move forward 1 bar, 1 pivot less. So off this pivot here, as the market was starting to go down, look what the market did. The market went down to this level and it came in and then made a reversal at this level here. So I'm just going to, just going to leave that on, place a rectangle around this level here. Turn the DPs off. You see what we're doing here. Go back to the shorter time frame. Were there any setups coming in at this level? Yes, there were. You can see there's our 15-minute DP support. Here's a DP buy on that shorter time frame. Our MTP trend was grey to show you in the process of making a reversal, and the market rallied up quite nicely as well. But the interesting thing for me, as it was rallying up, look where it rallied up into. I'll go back to the higher time frame chart. I'll just go back to the DP again, place that on. Now I'll take a DP off this high here. So this was 4 pivots back. So off this pivot high, look where we anticipated potential resistance. So that 15-minute DP buy went right up into the higher time frame resistance area. Again, you can do exactly the same by placing a DP level off the high there for potential resistance. Remember, these are all on the chart in advance. As the market started to come down, again, you'd have done this in advance. You'd have taken it off this pivot here because this is the last pivot in swing into the high there. So remember, as the market was coming down, this would be an area for potential support. And as you can see, the market has been amazing, hasn't it? It's been bouncing off these levels, absolutely amazing. So now, where would the next resistance area be? Well, let's go to 2 pivots back. So we're now taking a DP off this high. This would be an area of resistance. You see the market hasn't got here. So on the short time frame, we wouldn't be looking for any sell setups in here. We'd be looking for buy setups. That would be then our next 15-minute resistance area. So can you see how we're working? We're basically projecting in advance areas on the higher time frame chart. If I now turn the DP off, so that won't recalculate like it did last time, we go back to the time frame we're looking to trade off. It has caught the highs really nicely, hasn't it? So it ping-ponged between the DPs very nicely. So caught that high, came down, caught the low, caught that high, caught that low, and now it's rallying up here. So during this time frame here, we'll be now looking for buy setups and not sell setups till it reached this resistance area. And you see nothing's happening here. There's been nothing at all. And this is what happens in the markets as well. It's the good, the bad, and the ugly, what I talk about, isn't it? You've heard me say that before, the 3 spaghetti westerns. So even though we've actually had some really good setups where we had a lovely sell there, a lovely sell there, then a lovely buy there. So we've had some good trades. There will be times when there's losses. It's important to understand that losses can and will do unfold. And then perhaps we'll have a quick look at a losing trade on the E-minis in a minute. Because I know quite a few of you follow the E-minis. So we'll have a look at those in a minute. But it's also important to understand that even if you catch the low like this is what I find frustrating myself, is that when you catch the low like this on a DP resistance, the market reverses and you just sit there and you're thinking, where are the setups? Give me some buy setups. And sometimes the market just doesn't do this. But this is the good, the bad, and the ugly of the markets. This is the reality of the way trading is. If trading was as simple as just finding a setup, phoning your broker, and then getting money into your account, we'd all be billionaires, wouldn't we? But that's not the way it's like. I don't know how many of you watched the tennis at the weekend, but it's very nice to see a Brit winning another Grand Slam championship over there in the Flushing Meadows over the weekend. That was nice. But the point being is that she had such a strong mental attitude in that she was taking every point at a time and biding her time before she made the killer blow. And that's what we have to do with trading. It's almost like thinking that during this time, you're just in a rally. You're just biding your time. You're keeping your powder dry. You're just waiting until you get the chance to pounce. And you pounce and make the winning shot when you get a clean setup. But that doesn't happen all the time. That's very important to understand that markets can be frustrating like this. The market's going in the direction you anticipate, but you can't be in on it because there weren't any setups. So we talk about this quite a lot, and hope you guys do like or appreciate that we do like to look at the uglier side of markets and the harder side of markets and the psychology of trading to basically show you guys exactly what it's like in the real world. We don't just spend our time just looking at great setups. We look at the harder times as well. So are there any questions on that before we skip over and have a look at the E-minis? Because, this is, even though it's Bitcoin that we don't tend to look at much, and so I don't follow myself, it's exactly the same approach as we do week in, week out. And this is what the good thing about MT Predictor is, we're doing the same now as we did last week, last month, last decade, 20 years ago. MT Predictor is basically using the same algorithms as it did when I first designed it 20 years ago. But that is what you should be doing. And there's no point actually having algorithms that change and evolve, because it's like moving the goalposts. You never know where you are. The best thing, I think, is to stick with something that has proven itself over years and decades. And the thing that you have to do now is just understand that you don't get these setups all the time, and it's important to wait till the picture's clear. And that's the psychological hard part about trading. So any questions on that, or shall we move over to have a look at the E-minis? I think we'll do that, but I thought it'd be quite nice just to have a look at Bitcoin, just to show, we're using different market, but exactly the same kind of approach. So I just want to have a quick look at the NQ from this morning on a 3-minute chart. So this is a 24/7 chart, 24-hour chart on the E-minis, and I want to have a look at a setup that unfolded very early over the night for you Americans. But again, I want to just go through exactly the same approach as we've been doing on the 15-minute and hour on Bitcoin. So here we're looking at a 3-minute chart. So we'd go out to the 15-minute for the higher time frame. So I want to go back to just before that high there. And what do? We place the DP on the last high in the same direction. For you guys who want to know which pivots to use, there are specific webinars recorded in the member section of the website that go over exactly which pivots to use. And if you remember, when the market is going in the same direction, you use the last pivot in that same direction. So you'd right mouse click over this pivot. It's quite a small one here, but again, it's on the chart in advance. We turn training mode off. Can you see what happened? The market went up into that level, started to back off. So if we look at the 3-minute chart, and again, I'm going to use training mode to go back to here. This looked like an absolutely perfect setup, didn't it? So let's go through it. Market made a rally up here into the higher time frame resistance. Market started to decline down. It then made an ABC correction up into a sell setup. Our MTP trend was red. Everything looked to be exactly, in our MT Predictor tick box. Nice, clear, clean reversal. Nice, clear, clean trend. Lovely, clear, clean swings. Looked like it's going to be a good trade setup, particularly with a profit of almost 15R if it gets there. So, this looked to be really good. But look what happened. It gets taken in, then suddenly, bang, it will then stop you out. If you didn't get stopped out there, which you pretty much sure to have done, fairly soon afterwards, it's gone through that level and would have stopped you out. So no matter how good or clean and clear a setup looks, there will be losing trades. This is a hard and fact reality that a lot of you will have met head on with trading, and it's just the way it is that there are losing trades. It's as simple as that. This is why we use position sizing that varies the number of lots, contracts, or shares. In this case, it's risking less than 2% of a $20,000 account. If you have a smaller account, obviously it'll be less contracts. But if I stick on our default account, that would mean going short 8 contracts. So it would have been a loss there. So it would have been a -1R loss. But Mazir's on the ball here, because he said, well, if you're had the higher time frame on a 15-minute chart and you're looking to follow 3 minutes, can you also have 5 minutes? So if you had a 5-minute trade, look what happened, Mazir. You're exactly right, because if I go back to here, this history triangle was our losing trade on a 3-minute. There was another trade set up on the 5-minute here. It would have been a losing trade. So I think Mazir, you've been in this situation before, isn't it? You could have had 2 losing trades, then suddenly you have a possible third trade that again looked to be a good trade setup. But in this case, if I turn training mode off, look what happened. The market went down into the first target where a profit of 6.8R, shall we say 6.5R for easy maths? 6.5 times greater than the two previous losses. So this is the important thing to understand with trading, is that it's not about the percentage of winners. You will get losses, but the trick is keeping those losses small. Because when the profits come through, all the MT predictor trade setups, particularly the W3, which is the wave 3 trade setup, which we've looked at in before, and there are webinars specifically on that, and our VS setup, the volume spike setup, both of them are geared towards trade setups that when they are right big. In other words, they're looking to have large profits, not just in dollars, but in risk reward units. And this is what moves your account forward. It's having the big winners come in. So, 6.5R would have made up for the last two losing trades, then moved you ahead as well. So that's a big thing with trading, and actually understanding that losses can happen, but we're looking for also trades that have big profits. Yeah, Mazir said that 3-minute TS4 losers most of the time turn into good 5-minute TS3 winners just afterwards. So yeah, that's quite a good observation, Mazir. And then what's the market done since? Well, it's been quite choppy. So if we go out to then the 15-minute, what support levels would we be looking on this? As the market was starting to come down, we're probably taking DP off here. It hasn't got anywhere near it. The market started to rally back up. As it rallied back up there, what level would we take? We'd probably take a DP off the last sort of major high, which would probably be off there. And it's sort of gone just about through it. So it's not clear. It's not really reversing at the level clearly. So again, this is a great situation that after a couple of losses, a nice winner is now gone into that random period where, you can't really get, if we go back to the 3-minute chart, you can't really get any discernible clear pattern, even on the 5-minute as well, no clear discernible pattern. These setups weren't really coming off good support. It's gone beyond the resistance. So, you're at that stage where it's in the I don't know part, and you just have to stand aside. The good, the bad, and the ugly. So that's probably a good thing to remember, those spaghetti westerns, the 1970s. Keep that in your mind, that the markets will always have the good, the bad, and the ugly. And those three go in cycles around over time. So you'll have the good setups, the bad setups, i.e. when you have losing trades, the ugly, i.e. when it's just plain, you just don't quite know what on earth's going on. So the good, the bad, and the ugly is probably a good high sort of light-hearted way to remember it. Yes, Mazir, you can have times when you have to wait, and there are no really good any good trade setups that you catch, and that's frustrating. But the good thing is you're keeping your powder dry. In other words, you're not throwing your money away on stupid trades, because psychologically that's really hard to deal with. If you get desperate and you start doing trades that you shouldn't have done, they end up in losses. That really is really devastating. It's much better to have a period when you're just sitting there doing nothing, because your powder's dry, you've kept your account intact, ready to go when you get a good clean trade set up. And sometimes it can take a bit of time. But this is why 97% of amateur traders end up losing. It's a real harsh statistic there that very few brokers will actually tell you, but it is a very harsh market sort of career that we are all in here, where the vast majority of amateur traders never make it. And there's lots of reasons for that, which we've discussed in the past. Right, are there any questions on anything that we've talked about so far, and anything you'd like to look at in the next sort of few minutes of the webinar? Most of you who in the webinar have been in for quite a while, so most of you will be very familiar with MT Predictor, so most of this should be quite familiar to you all. I think I might be getting a few emails with people saying, why is the webinar scheduled for an hour later? So I will look into that and see what happened. I think I know why it was. I think it's because the webinar program that I use suddenly asked me what region I was in, and I said the UK, where my PC is actually set on New York time, so it probably confused it between British summer time and the PC that I've got is on New York time. So I think that was it, and I think I know how to fix that for next week. Right. So any questions on anything that we've looked at so far? Or are you all happy? And hopefully you've enjoyed having a look at Bitcoin as well. It's quite nice to have a look at a completely different market that we don't look at regularly. I mean, I included it because I know there's quite a few new customers who are trading cryptocurrencies. So it's nice to come in and take a look at these different markets from time to time as well. Right, I think everyone's happy on that, so that's really good. So what I'll probably do is end the webinar a little bit early, so we have a chance to all go and do some trading now. So I'd like to say thank you very much for a good or thank you very much for attending. So it's good to see you all and good to hear the questions coming in. So hope you all have a good trading week, and let's see if we get some good setups coming through in the next week. Now we're in September, things tend to sort themselves out, and the kids have gone back to school. We get back to normal market routine, so it should be back to business as usual. So have a good trading week, everybody, and we'll do it all again next week.